So it's a couple of hours and then Nirmala Sitharaman will be sitting down to deliver this budget. What do you actually expect and what would you like to see?
Good morning, Rishad, and thanks for having me. It's a pretty critical time for a budget, and one doesn't envy Finance Minister Nirmala Sitharaman's shoes. Look, it's coming at a very critical time. Clearly, India's gone through a pretty torturous COVID-19 situation, and the actual contraction in GDP is probably a lot higher than what the headline numbers suggest. The good news is COVID-19 infection seems to be behind us now. There's some kind of a herd immunity, fingers crossed, which seems to be developing. So the numbers are pretty promising, and we are seeing economic activity bounce back. So we're seeing strong consumption. You know, the numbers for GST for January came out just yesterday, and they were very, very promising. And we're also seeing some large government spending coming through. So there is a recovery underway. So what I would look for from this budget is two things, Rishad. One is the credibility of the numbers. India's budgets, particularly in the last 3-4 years, have been mired in a lot of smoke screens. So it kind of dilutes the credibility, and it also hides a lot more than it reveals. I'm hoping that they use the COVID-19 situation to come and make a clean breast of the numbers. And the second part is I'll look for a push towards the creation of output, domestic output and jobs. You know, we analysts tend to mistake consumption and government spending for growth in India. It's not necessary that consumption should translate into growth. Our domestic output has kind of disappointed in the past. So it's quite possible that a recovery in consumption and government spending translates into inflation and higher imports rather than into domestic real growth. So those are the things to watch out for. Lots of things the budget can offer in terms of offering domestic output and growth. India's economy is broken in parts. The financial sector, the industry, as you said, you know, Make in India is a challenge, and we're hoping that some things happen on that front. And the ease of doing investments for supply chains to come into India. A lot of things that could be done on that front as well. So yes, a lot of expectations from the budget.
Absolutely. Yeah, absolutely. And the thing is that you look at what is on the table. I mean, for one thing, tax collection has gone up in India. It's a welcome relief, that is. But they're going to need a lot more than just a slight uptick in tax collection to finance all this. Because you've got to move, I suppose, ultimately to be having productive investments, i.e. infrastructure and that sort of thing. But there are also things which perhaps cost nothing, which would be, as you've alluded to already, regulatory reform, making it easier to do business in India. And that's fundamental.
Oh, absolutely, Rishad. So look, you hit the nail on the head. We have something called the revenue deficit, which is the difference between the regular expenditure, less productive expenditure of the government, vis-a-vis the actual revenue collections of tax and dividends and so on and so forth. That could move up to as high as 7% of GDP as of this financial year, shown off the accounting smoke screens. That's a terribly high number. On the flip side, the actual capital spend directly done by the central government is barely 2% of GDP. So there is a pivot which is needed away from wasteful expenditures into regular non-productive expenditures, subsidies and interest cost and salaries and such like, into capital investments into infrastructure, education, healthcare, nutrition, and of course, things like the revival of the financial sector. So we are hoping to see such a pivot. The economic survey, which came out on Friday, did promise some of that. So we're hoping for that to happen. Frankly, Rishad, if spend is going into the right productive areas, I'm supposed to be a fiscal hawk, but I wouldn't really mind a bit of a fiscal stretch as long as we can confirm and ensure that that money is going towards productive investments. On the last part of the regulatory side, look, I think the biggest part that the Ministry of Finance can address right now is the reform of the financial services ecosystem. Currently, our ecosystem is in no position to fund and finance our growth aspirations. You know, we will survive, but that's not enough. We need the financial system to actually run a marathon and grow the credit to deposit, credit to GDP ratio, just barely at 50% right now. A lot of work needed. There is an overhang of non-performing assets, which is not yet fully recognized. Resolution is slow. We have a good bankruptcy law now, but the progress has been painfully slow. There is recapitalization required and a lot of reform. You know, 60% of banking is public sector. It's not the most efficient.
Right.
And yeah, go ahead, Hasnindra.
Anand, I want to follow up on taxes. It's split down the middle. Some are calling for the rich to be taxed further. What's your take on that?
It's a great debating point, Haslinda. So look, it is a kind of a K-shaped recovery in India. We are seeing the urban rich and the organized sector do reasonably well. There is capital gains in the system. The equity markets have recovered quite sharply. So do some people have the ability to pay higher taxes? Absolutely. But personally, I think this would be a terrible time to raise taxes. We're just going through a debilitating contraction thanks to COVID-19. By the way, while the official contraction for this fiscal year will be minus 7.7% or so, I think the real number is closer to minus 12%. So this is not the time to actually look for taxes. It's okay for the government to spend, but the big challenge and the big real imperative is for that additional spending to go into productive investments, infrastructure, education, and such like. So I'm not a fan of taxes at this point in time. Even if some people can afford it, I don't think the economy as a whole can.
Anand, just one final question. The government estimating 11% growth in the next fiscal year. That's higher than China's 8.1, 8.2%. Is that really realistic?
It can be, Haslinda. So look, a couple of factors which contribute towards overall GDP growth are looking really robust. So we are seeing consumption bounce back quite sharply. As I said, it's a K-shaped recovery. The rural sector is doing well. The urban rich are doing reasonably well, and that's driving consumption up. We will also see a rebound in services consumption, which should aid growth going forward. Likewise, government spending is going up as well. I think the government today will pivot towards even more spending and at least keeping the spending pace up. So consumption and government spending should look good. In theory, that should translate into real GDP growth as well. But India's challenge has been domestic output. Every time we see consumption growth in the past, history has shown us that we tend to either see inflation because we've got too much money chasing too few goods, or we see higher imports or we see higher imports leading to an external imbalance.